Nick and I got carried away again. So I just posted the green room recording. We are talking about credit spreads. We are talking about Nvidia. We're talking about the state of the market, and there might be trouble ahead. Enjoy.
There may be trouble ahead, but while there's moonlight and music and love and romance, let's face the music and dance.
Hey, Nick.
Good morning.
I was lazy. I'm just getting some slides over.
Don't worry.
But what really interests me is, did you listen to Macro Voices already?
No, I think I only listen to Macro Voices about once every 6 months.
Yeah? No, you had David Rosenberg on again.
Okay.
It was actually quite interesting because Bianco is still, inflation's going to get you. And Rosie was completely on the other side. And he asked him about, what do you think about Bianco? He said, yeah, Bianco's a friend, but, and he made actually a very coherent argument to say he unwound it like an economist. Yeah? He said, we have a supply side and we have a demand side. We have at the moment growth in the supply side of about 3.5%, and we have growth in the demand side of 1.5%. During the Corona crisis, it was completely the opposite, and we saw it in inflation. Now it's turned around. GDP is next week, right? The final GDP. GDP is at, as he called it, when he started in the 80s, he said they called it at stalling levels, at around 1.6. Yeah, where it could go both ways, but you have to be very careful on this side. And I thought, yeah, if I have to come down, even though it's just fucking paper money, I'm more on the side of the Rosenbergs of this world.
Yeah, I am as well. Even though we know that true inflation is probably a lot higher for people, so therefore it doesn't really matter how we measure it, right? I mean, who cares? If I say GDP is 1% and GDP is 10%, who cares? Because in the end of the day, if the government convinces you it's 1%, then it's 1%. And but the most important thing is for me confidence in the economy. I mean, sort of social mood. That drives everything. And at the moment, social mood or confidence in the market or confidence, I should say, is fairly low. And you might say, well, hang on, it's stock markets are high and all of this stuff. But I think the confidence is probably the true thing that you could lean on and say there's trouble ahead.
Ooh, you remember that song? There must be trouble ahead.
Don't even think about it.
I remember this. I think it was a commercial for an insurance company, and you see the father. New York looked like a big old Jewish family. He was shaving in front of the mirror in the kitchen, and the wife was there, and three beautiful daughters, all teenagers, sitting at the table. And one comes in and says, "I found this, a pregnancy test." And then he looks at his daughters like this, and then he turns to his wife, and his wife is like, and then they cut into this song. There must be trouble ahead. I'll try to find that and start that as our intro today.
Yeah, it's true. There must be troubles ahead. Not your singing, hopefully, but maybe.
No, I have 4 slides actually, which are very interesting. I'm just getting them ready while we're talking. Am I deleting all the stuff again I had in here earlier? It looks like it, That bubble, and the CapEx slides, which I found very interesting. Obviously, story is the more and more I hear the narrative changing about Nvidia. Are you sharing this thought, or am I making it up because I'm talking
the narrative change? Which narrative change? You mean it's cheap or that it's expensive? Because I'm not sure what the narrative is.
That the whole gold mining analogy, which was always out there. Okay, Nvidia, people are making squillions with gold, they think, but the guys who really became rich were the guys who delivered the shovels of it all. And the shovel delivery guys were NVIDIA in this case. And now when I'm listening to the various podcasts, it's this, everybody's questioning where the guys who are supposed to make money with artificial intelligence are actually making money with artificial intelligence.
Well, I mean, yeah, we have kind of covered this in a way, but it's worth covering again because we still need to prove the story. At the moment, NVIDIA is making a ton of money, so everybody is buying into the NVIDIA story. They're forced to, yeah. If a company doesn't do AI, they get hammered on the stock market. And then on the other hand, if they do AI, like Meta, where they spent a lot of money on AI, they say, well, where's the profits? We don't want you to spend the money. So you tell me, the future is the AI, but where the profits come and when the profits come, I'd say, the market expectation of earnings growth is pretty optimistic. Okay. But these are the experts, these are the analysts. So we follow the analysts until the analysts say, well, actually, it looks a bit dicky, and they start changing their forecast.
Yeah. So almost there. It was a nice slide from Tasty. They looked again in how priced in are splits over time, stock splits. And the interesting thing is over a year's time, not really big difference to before.
Right.
Year after split, absolute returns. Do I have the right slide here? Oh.
The dangerous thing about splits is that you split a stock right at the top of the market.
Yeah.
And then suddenly this $10 stock becomes like the price of beer. And nobody wants to own, one of these sort of, you're drinking something now, these $2 stocks. Yeah. So, I mean, that is a risk for these companies, but I understand why they do it. Yeah.
Yeah, absolutely.
The good old
Liquidity.
Berkshire still quote 65,000 or whatever it is.
Nick, liquidity. What's your indicator saying? How are we there at the moment? Because I think that's the only thing it's actually still sustaining the market.
Yeah, I think, I haven't looked, I must say, for a while, but reading the comments from Cross-Border Capital, who do this thing weekly, they effectively say, small up, small down, but it kind of doesn't really justify the level of risk appetite in the market. So there is a difference, right, between where the market is and where perhaps the liquidity measures might say it should be. Or at least that's my kind of interpretation of what's being said. So liquidity is not abundant. Yeah, it kind of is okay, but it's not super abundant. And for us to maintain these kind of levels in the market, I would say a lot more needs to happen, like perhaps the Chinese start to add more liquidity, or perhaps the bond market starts to rally substantially. So, it's just not quite fitting in it's not in sync at the moment, in my view.
So still in a holding pattern then, right?
Yeah, but when I look at the charts, I mean, on Friday, late Friday, I sold the Nasdaq. I mean, hello, this bullet train. Are you mad? Yeah, I mean, I have to follow the structures at the end of the day, and it looks like to me the market is kind of in that sort of pause moment, and I can't really see excitement over a summer period.
Yeah. So these were the couple of slides regards to Jesse Felder. He had this out again. So that was the one we had last week, obviously, the NVIDIA slide. And charts show market cap of NVIDIA versus three major European market values in US dollars.
Yeah.
Have you ever seen a peak then? Then I found this was actually very interesting, bringing us back to the conversation I asked you at the beginning, the gold digging analogy. Yeah? If I look at this, we have the technology trigger. Sure. Yeah, we've seen the AI, but the more I read into this stuff, AI has been around for decades. Yeah, they called it machine learning, they called it this, that, and the other. But there has been a slow progress development, which we all got annoyed in our call centers and everywhere in, right? Then suddenly
I did it at
they
university in 1982. I mean, that's how
yeah.
Even when I did it, it was already in play. The
Then
trigger for this whole AI thing was ChatGPT. That was
I was
when
about to say, then they introduced the large language models, yeah? And everybody thinks, oh, it's the bee's knees, absolutely cool. And the more and more you read up on that, people say, yeah, but it's not really intelligent. Intelligent is something else. Yeah? I heard this one podcast was hilarious. I'm just making up now because I've forgotten where it actually happened. They've asked a large language model on artificial intelligence to optimize the train traffic in a specific region to reduce accidents. Yeah? And after a lot of computing time, the AI came out and said, yeah, stop the traffic.
Yeah, I mean that's
Yeah, it didn't say, okay, you have to do this, that, and the other. It said, no, stop. That's
I
the optimum
understand.
solution. And you think,
Yeah.
really, that is not proof of intelligence, this answer, right? It's cocky and it's like where you would win a bar bet, but it's not what you expect from an intelligent tool. So peak of inflated expectations, I think we're right here, right?
Yeah, I think that this is a really good slide. I don't know where you got it from, but it's a really good slide because I actually see that this is how it works, right? We get all excited about new tech. We spend a ton of money on new tech. Of course, the economy looks like it's booming from the central bank's perspective. They say, well, what should we do? We won't cut rates, maybe raise rate, all of this stuff about, oh my God. But then the benefits of all of this happen much later, much further down the road than people expect. And that's where you get this sort of, I guess, this disillusionment. Look at the same cycle of blockchain. 2 years ago, we were all bloody, the hype on blockchain is this and take over banks. It's going to eliminate banks, going to eliminate the Amazons of the world. It's going to eliminate all of this stuff because everything's going to be blockchained up. But yeah, the market cap of blockchain has been relatively mute over that period, whilst the market cap of all of the companies that were supposed to be taken over or eliminated have gone like a rocket. It's the same thing.
I've just found it. Jesse Felder posted that. It's a repost from a Bloomberg article. This chart.
Well, I think this is a very good slide, and however the market joined the dots of ChatGPT, the sales growth of Nvidia to AI is the thing, and you can tell it's not really the thing because only all of a sudden most companies in their how should we say their quarterly earnings, they all quote now AI. So they've got to buy this stuff. So they go and buy more Nvidia stuff because of it. So they're way behind the curve. And then they get this piece of tech and they say, right, what do we do with it? So well, I don't know. And then it takes time. And I think the benefits will flow over time. But it's far too early to say that suddenly this whole thing is going to, is the answer for everything.
No, here there was another slide from Jesse. As I said, thanks to Jesse, I stole most of it, not stealing. Well, he's reposting it from X as well. But that was the CapEx cycle and the expectations, how much money will have to go into the refitting of these outfits who will allegedly make fantastillions with artificial intelligence. So you get very capital intensive. And the proof is, how do you Brits say? In the pudding.
Yeah,
so show me the beef. Where's the money coming from the AI stuff?
Yeah, and that, as I say, that's the key thing about market expectations on earnings and elevated expectations on earnings. they've spent, all of these companies and more have spent a shed load of money on this tech, this piece of equipment. But they have to prove that they're going to get value out of this thing and cash out of this thing very quickly. And that's not been proven yet. It doesn't mean we collapse tomorrow. Everyone says, it was just a big con, but it's clearly not a con. But let's just say the expectations are perhaps ahead of themselves.
Well, let's just dive into a couple of examples. I like watches. Will AI improve the watchmaking business and allow people to produce watches cheaper and make more money with that? Can't see it.
Well, is that AI? Because alongside AI, there has to be a lot of development in robotics and how plants are run in the future and all of this stuff. And, they're just assuming, AI, I buy a chip from NVIDIA, therefore I can make a watch more effective and cheaper because I won't need all these workers. I mean, I guess that's the theory. It is. We said that originally. We said, over time, the markets, the stock market corporates will benefit from the fact that labor is going to be sort of relatively cheap in the future because of technology.
Because I chose that example. I told you.
Are we on air, by the way?
No, I'm recording, but that's fine. I told you over lunch the watch I got for Father's Day. The good old Casio, quartz watch. For $50 you get it now. It's a classic. When this thing came out in the 70s, it was costing a fortune because quartz watches were the bee's knees. I remember the first pocket calculator my father had. He was using a slide rule. I still remember that as a child. And then he had this. Then he had this. Was it Texas Instruments or was it? Yeah. With a green display, and it could plus minus division and square roots. Maybe a little bit more, but that was it. And that did cost at the time almost 1,000 Deutschmarks. Inflation adjusted, that's like $4,000 today. Right. So where these AI improvements could come in, let's take our little corner shop. You give seminars, I give seminars. We don't do it for a living. We do it on occasion. We like it, but we also get paid for it. That would be the point where you say, can actually an AI take that away, give it to somebody else and make it far cheaper? No, they would have to steal our experience, not steal, or collect it from somewhere all over the internet, reassemble it, and then being able to answer questions intelligently without having ever had the experience firsthand.
Well, we've got that today now. We've got this chat GPT. You throw a question in and you hope you get a right answer, unless and we know that you don't quite have the right answer. And if the chat GPT is the be all and end all of everything that we are talking about, well, I think we're overcooking it somewhat.
We are, aren't we?
Yeah. But I think, the real sort of truth comes with the development of robotics, because that's where the corporations start to benefit a lot more than they do. Meta and, data analysis and all of this stuff has been going on long before, the AI sort of chip from NVIDIA. But obviously you can handle a lot more data now, I guess, with these chips. And maybe that's kind of the thing. Is advertising, the real kind of benefit for society? I'm not sure about that.
No, you can only advertise.
Look at the two of the companies here, Meta and Google. It's an advertising shop.
Yeah.
Yeah, what's that going to do to GDP? Not very much. It's hardly about sort of, building bridges and roads and trains, making them more efficient, and sort of curing cancer. And I don't think so.
Don't get me started on that. You just mentioned bridges. I saw this in the Deutsche Tagesschau the other day again, that over 7,000 bridges in Germany are pretty much, motorway bridges are pretty much defunct. And you think over the last 20 years, the state started with €500 billion and is now at almost $1 trillion. Where's all the fucking money going, Nick? It
Well, I
can't
mean,
go in the infrastructure. Where's it going? Same in the
well,
UK.
yeah, absolutely. Same
Who's
as
stealing
UK and
it?
same as in America, and we can see all of that. And I was talking to the missus today because over the weekend I was sent on a mission to go and get pizza, and and just as I mean, literally getting to the pizza shop was only about 10 minutes down the road, but it was starting to rain, so I thought I'd take the car. And by the time I got there, you couldn't see the road because there was so much torrential rain. I got out the car within a second, I was drenched. The water on the street was above my ankles. Don't know what happened there. Was above my ankles, and as a result of that, I mean, I was absolutely soaked and could barely walk in these, shoes. And I said, well, the water's not draining away. Obviously, there's so much water, and she was saying that in Asia, they build the roads with porous material, and water actually sort of they handle water and these extreme weather conditions a lot better. They spent the money wisely. And we build these concrete towns, and we can't cope with this thing, and we're in shutdown for a while, I must say. And so, where's the money gone? It's not gone wisely, is all I can say. And I think that's probably part of the, why is the consumer unhappy? Why is the voter unhappy? Because everyone's sort of sitting back like football fans in the back of the stands, knowing that they can do the job a lot better than the manager. But I think in some cases that's probably true.
Oh yeah, of course, without any doubt. Just sorry, our politicians all over the world. Where are the guys who actually ever did run a business, ever had to make payroll for their employees, ever had to make prudent planning about stuff? It's all about getting re-elected in this cycle. I'm more and more getting upset about the fact you have kids, I have kids. They're at this age where they have to build their own lives now, right? You see at the prices for property, for everything, the taxes they pay. Where on earth do they even have remotely the same chance we used to have, Nick?
Yeah,
We're both from modest backgrounds and we made a decent living out of it. Our kids grew up with, well, I don't want to say plenty, but with comfortable surroundings, yeah, with parents who were able to invest in them, in their education. And now you think if they want to be their own man or their own woman in a society where it's literally impossible for them to ever own a property on their own merits, how screwed is everybody? That's not going to end well.
Yeah, so the world has been kind of financialized, or at least the Western world is mainly financialized, yeah, and that's sort of given a boost to financial assets, stocks, real estate, and all of this stuff. And it's gone down that route because of the policies chosen in the past. Yeah, it's sort of benefiting one part of society and hoping that it trickles to other parts of society. I mean, it's clear that we've had growth, but you're right, when we look at the opportunities for kids these days, in the end of the day, we know that the only way they can afford a house is to inherit a house of their parents.
Unbelievable. Well, they want to take that away as well. And that was another one, nice Bloomberg chart, bubble valuation. I found that very interesting. Percent of SPX value not explained by book value or net present value of next 3 years, earnings per shares expectations. I don't know the details of the calculation, but just the buzzwords. Net present value, book value, earnings per shares expectations for 3 years forward. Bloody hell, I would sell this market.
So I'm in the process of and I'm still struggling with this valuation metric because I think valuation is really important at a time where you're buying stuff and you're putting it into a portfolio or people are investing and then suddenly the rug gets pulled somewhere, whether it's the liquidity or whatever it might well be. And that should be okay as long as your value is close to reality. And for a number of sort of instruments and stocks and investments, that's not the case. And so when you look at the historical kind of earnings growth for companies, it's been fairly flat, right?
Yeah.
And suddenly we're now in a phase where the earnings expectations are really high. And you need them to be really high in order to sustain the valuation. So maybe this year it's right, maybe next year it's right. And only remember this year is right because last year was really bad. So the kind of, let's just say the growth, was because we have a kind of a bad base. And maybe the year after that. But going forward, that's a real big question mark. And that's where I'm struggling with right now. How, we have less confidence in the valuation metrics going forward. And on that basis, the value of the stock market is beginning to look, how do we say, suspect. Now, again, it's a situation. It's not a signal to sell. So we don't sort of just react on that, but we get cautious.
You know
And
what I had the same feeling in January from December 2020 on, all through January. And what we need is the external, the macro kicker to actually put people's eyes on the whole thing, right?
Yeah, I mean, we don't have that catalyst right now. And so being nimble is very important in my view. And whilst I still believe that there is, a lot more stock market growth to be had, it doesn't feel that it's the time to expect that now. And therefore, I think sort of we are at stretched valuations. I look for trigger points in charts to say, okay, now's the time where we may see a reasonable correction, put it this way. We're more likely to have that now than in the past. I think I've also said that in the past and been premature, or at least the corrections that we've had have been fairly minimal. They've not really been large. But I think as we go higher, the corrections will get larger. And I also said to you, earlier on, I shorted the NASDAQ on Friday. It looks like there is time for a good few hundred more points as a correction in NASDAQ than it has been in the past. So I'm being more flexible, cautious, cash. If you like, I'm doing a Buffett, right? I'm saying this is not really a time to be fully exposed, overexposed, and certainly never a time to be leveraged.
I listened to a financial advisor earlier, and he was like, "Oh yeah, about the merits of portfolio management and structuring your portfolio and everything. Everything I 100% agree with." And then he was having a go at the guys who put their money in short-term cash for over 5% and said, "Well, yeah, what was the merit in putting your money into short-term treasuries when you make 5% and the equity market has already made 17%?" And then I thought, yeah, you prick. The equity market didn't do that. Look at the S&P equal weighted. You barely moved. You're at 4%. You've outperformed actually with your boring cash investment. It's come down to Nvidia. And now I look at the charts again, and that's why this chart gets me. The former, besides Tesla, Magnificent Seven, they all look as if they are away from a breakout again. Now Facebook is right at this level again where Apple gapped through. It's the monster stocks are again at chart levels where I think, yeah, that could be another push to the upside. If now Facebook, I don't know, finds the bee's knees somewhere and is able to monetize on artificial intelligence, you get this push even further. And we had that last week, the wall of fear, right? We're climbing it, aren't we?
Yeah, and also remember, the US is still a magnet for safety. So if people are, let's just say, a bit concerned about what might be going on in Europe or what might be going on in Asia, the US is a natural kind of, it's a place for people to come and invest. If that means that, more money goes to Nvidia and they don't need it, or Apple or Meta or whoever, then that's where the valuations move. Yeah, I mean, it goes with flow. So at the moment, flow is benefiting that, and it must be from overseas money because you see the dollar also a little bit higher these days. So maybe it's just a phase concern of somewhere else being in a real mess, and we just try to explain these things. But I mean, I don't really have a comment on the valuation. I think it's right, but it's gone up. Our problem and everyone's problem is we know the situation, what's going to be the catalyst to turn it, and how do we behave? How do we behave responsibly at levels like this? And my answer to that, and it may not be the right answer, but my answer to that is to reduce exposure.
Hey, could be the catalyst Great Britain.
Well,
I mean, you're the Brit on the ground, yeah? And I'm following the news, and you have Nigel Farage somehow weirdly making enormous headway where everybody said, yeah, it's a done deal. Labour is going to win the election, yeah? And the Conservatives are getting destroyed, but the Reform Party with Nigel Farage will not get in. Okay, fine. So you'll have a super, super lefty government under Sir Keir Starmer. Now you have this almost Trump feeling here. He's politically completely incorrect. Last week he was slaughtered because he said, well, yes, the European Union and NATO provoked Russia, and which was very clever because when you say something like this in an official interview, you know you're going to get slaughtered by everybody. So the opposition, Labour, came out, slaughtered him. The Conservatives came out, slaughtered him. And I thought, why would he say something like that? You know what he has achieved? He actually equalized the now opposition, future government, and the now government, soon to be obliterated, obliterated, put them both into one bracket and positioned himself as the only real alternative of people who say, yeah, no, we had enough of this war mongering. And when you go through the YouTube channels, that could be this external shock. Everybody, or not everybody, but a lot of people talking about now that a war might be really on the deck within the next 3 months.
Yeah, I mean, whether it's sort of next 3 months or the next year, the time between sort of peacetime and wartime wartime is becoming more of a real prospect. And I think what Farage basically said was not a provoking war, but rather sort of suggesting that we shouldn't be going to war. And I think
exactly
that would be a kind of a sensible thing to say that, oh, maybe we made a mistake. Maybe it's not all someone else's fault. Whether it's right or wrong is a different thing, but I think it sort of sows a seed of doubt. And but I don't think that's a kind of a negative thing for a macro outlook. Oh my God, he said that, the world comes to an end. I think it's more likely the world doesn't come to an end because he said that. And I don't think that's going to be a kind of a market moving event in any way. And I think the UK election is the UK election. I just think the expectation is likely to come through. The Conservatives get, the wipeout that I think a lot of people believe they deserve. That we're in power for a great many years and cocked it up. One after the other prime ministers, another approach to this, that, and the other. Obviously, it wasn't, in my view, it wasn't just government. I mean, it's also the central bank. The central bank is to blame for many of the things that happened bad to the UK. So, let's not give them a kind of a tick.
They've asked Keir Starmer if he would be severely ill, would he use private healthcare? Yeah? And he said, no, he wouldn't use private healthcare. He would rely on the NHS, your big treasure over there. And I thought that's, again, the wrong question. You left him wiggle room to get out of there. I would have asked the question, Mr. Starmer or Sir Keir, you have a root canal infection on your teeth right now, and you can't get an NHS dentist. Would you pay the $1.5 grand to get treatment by a private doctor? And then you would see him lying through his teeth, because if you have a root canal infection, you pay the money you don't have to get it sorted out. Yeah? I'm not saying that the NHS, you break a leg or you have cancer treatment, that they're not looking after you. They will. But if you have something which needs to be fixed now and you can't get a bloody dentist, of course, you would get him nailed against the wall right there to say, so how it come that nobody in the UK can find an NHS dentist anymore?
Look, I mean, like all governments have lost the priority, where the money should go. And he started that discussion with the roads and the bridges and the infrastructure and the future growth for an economy. But there are signs that the Brits just, off-piste here, but there are signs that they kind of woken up to that. And I think this is, from a macro thing, this seems to be more and more. And so the Brits are forcing pension funds to make transparent how much, so the UK pension funds, how much they're investing in the UK economy. So how many gilts do you own as a percentage of your bond holdings? How much are you investing in small caps in the UK, or large caps, or technology, or whatever, growth companies in the UK? And the more you make these things transparent, the more the political forces act on these savings institutions to force them to stay domestic. Now, imagine that in Europe, where people say, well, where's your money? Well, it's all in Nvidia, isn't it? And it's all in... so then the politicians might say, well, hang on a minute, we've got an SAP over here, we've got an Infineon over here. Why aren't you investing in these companies? Why do you have treasuries and not bonds? Why? You will have those same questions. Now, and the reason I say that is that today, Norinchukin Bank in Japan are going through their own sort of mini nightmare as they have invested in treasuries, lost money. And the supposed answer from these guys is, well, we screwed up on the investments there. We've lost a lot of money. Yields have gone up. The cost of hedging the currency has added to the losses on the bonds. But could we have more capital, please, shareholders, which is the kind of the agricultural unit in Japan? Could we have more capital? Because we've got a really great idea. I know it didn't work with treasuries. We're going to go and start to buy equities. We're going to buy, credit, debt, and all of this stuff. American, not domestic. So it would really surprise me in the current, situation where the Ministry of Finance is struggling to hold the value of the yen at this critical, in my view, 160 level, that you've got some bank, very important institution, investing in America, losing money from its investments in America, trying to get more Japanese capital to invest more money in America. And wouldn't surprise me if the Japanese start to force domestic institutions like this to shift their money home, similar to what the Brits are doing. And then you've got a world which is not sort of seeing the whole international flows from the traditional organizations, that it's actually people bringing money back home, because that's where the voters want to see it. And, you're not going to get money into the NHS if you're investing in America. So, you have to invest in your own economy. And I think that's where the next political shift is going to take place, because that's something you as a politician can steer.
So if we have this repatriation, which, well, Europe is trying anyway, all their rules are getting more and more protective to keep capital and keep investments in Europe. The Japanese bank, I read somewhere, they did unwind their whole treasury portfolio of 80 billion or something like that.
They want to unwind their...
They haven't done it yet.
I think it's around 40% of their treasury portfolio. And the money that they have lost, which is, billions, is instead, you would have thought that the CEO is firstly replaced. But no, the CEO is saying, hang on a minute, I know it didn't work there, but I've got a better idea. I'm going to borrow more money, and I'm going to put that money in credit, and because I can get more yield. I mean, this is an agricultural bank. This is sponsored by the agricultural kind of community in Japan. And their answer to investing in the agricultural space is to go and buy treasuries. Oh, that didn't work. Oh, let's go and buy some credit paper, probably from Apple, who need it the least, right? I mean, this is really a time, I think, where the politicians are going to say, sorry, independent banking, day of the past. We're going to start to get involved in the type of investments you have on your portfolio. That's just bang out of order. I think if I was a politician, I'd be leaning towards that way myself. Or at least I'd tax them more for it.
It's the FedEx trade, right? I remember this story having read once when FedEx was a new company. The CEO had, I think, $2,000 in his pocket, and he needed 4 to make payrolls before the next money came in, and he went to Vegas. actually. And I don't know whether he played poker or put it all on the wheel of fortune or something like that, but he actually managed to save FedEx with that kind of deal.
Well, brilliant for him. But if I was a politician, and I would say
Yeah.
the politicians have the power, obviously who's behind the politicians don't know, but I mean, the politicians have the power. And when I read this story, I thought, if I was a Japanese politician where I was scrambling, probably having sort of midnight calls on where's the yen right now, boss, and stuff like this. And in the meantime, Norinchu can say, well, those $63 billion that we've got, or $70 billion that we've got, which we're going to buy more of this American paper with, I'd be phoning him at midnight and say, right, get the stuff back. We need it. Intervention. And I think that's quite possible.
So when we're talking about, obviously, credit is the bee's knees for, at least for the Japanese guys, and the whole scenario we have right here. I didn't make money in the HYG over the last 18 months. Also didn't lose money, but didn't make any money out of it. Would you start, or you use the chunk as an equivalent in the United States? Would you start the first trade selling call spreads on top of it and say, fine, let's see how much more can spreads tighten in this scenario? Or is that exactly the scenario that spreads will tighten because everybody now goes into credits because they give this additional basis point, picking up the penny in front of a steamroller?
You see, this is probably where your straddle skills come into play because, you know, it really feels like, and a few weeks back, I already put out that I thought the credit spreads were likely to widen. And I mean, I think that's the direction it goes. But when I see this response from Norin Chukin, I say, my God, I mean, if they really are going to start to switch treasuries for credit, you know, who knows where these credit spreads will go? They're going to go flat to treasuries, or what's the deal? So on the basis that there is an alternative outcome here, which I hadn't considered, I must say I was more bearish in saying that the spread should widen. I say this is probably you might want to consider your straddle idea, price it and see what kind of break evens there are.
I was thinking about that because we had that before. You remember the Italian high yield bonds yielding less than US treasuries when interest rates at almost zero?
Yeah.
But that was the point. Interest rates were at almost zero. So the economy was sustainable. Yeah? They could always borrow more fresh money and nobody was in a panic. Now we are at a completely different level. We still have this debt wall rolling in at one point in the future. And a spread tightening seems in this scenario pretty unlikely for me.
Absolutely. And unless it's driven, and that's why I say it was never on my radar. Until I read the Norin Chukin article from Reuters, and I think, this now opened up something I hadn't actually considered, and that's why I thought whether politicians are likely to stop it. Nevertheless, let's assume that my original thought was right, that the spreads do widen, and if spreads do widen, then obviously your a straddle idea would work, and if you want to take a punt on credit spreads widening, then you could do that without the other leg. But I mean, that's where I'm kind of leaning towards. And then I saw some data on Twitter. I really can't remember who it was. Probably Daniel Di Martina Booth. So she's quite bearish. She put out something about more companies going bankrupt. Obviously, we're coming from a low level, so it's not really a thing, but it's a turning point, yeah. And then you combine that with your refinancing wall, and your refinancing wall for small companies, especially these days, who weren't able to borrow for a long period of time, so they face the wall much sooner. And if they face the wall much sooner, then obviously they're going to be hit the most. And with the bankruptcies, with a refinancing wall, maybe you got another problem here.
Well, it's something I'm definitely going to have a look at it, as we have now done the whole conversation and we're not getting promoted by an algo anyway. So
We're
I think
still in the green room.
Hey, stuff it. I'm smoking here. Yeah? We're never. If I smoke or I'm not smoking, we're never getting promoted. I'm simply cutting that together later, and I put the slide a little bit nicer.
Good stuff.
We were talking about, and we've done a full roundup here. No, a straddle on the HYG, I wouldn't do it at the moment because I think that there's more merit to the downside. We've established that. I think that makes
So,
it's
price is down, spreads up, in other words.
it's again a question of timing. What I would do in a situation like that, I would sell some calls and would use the premium to buy some puts on it to be neutral, because I don't think that spreads are really going tighten to zero. Not in this environment. Obviously, if the Fed goes and pumps the interest rates down to zero again because they have to, well, who knows what will happen. But assuming rational, well, are we rational still? Let's, for argument's sake, we don't have anything else. Let's assume that the market is somehow rational, that actually is more on the less likely side of a trade. So that would be the approach I had to, if we put something on an HYG. But as I said, I didn't make any money in HYG. I didn't lose any money in HYG, but it was 18 months. Every time I put a trade on, it was more like the struggle. Let's get out of there. Plus minus zero. And
I mean, you know, this is probably the same trade that you were trying to put on, let's just say 6 months ago, that you're thinking to do it now. And I think the timing is fairly interesting. As I say, a few weeks ago, I put out that I thought that there were clear signs of a start of a spread widening in credit, and it's definitely worth having a look at. You know, maybe they just stay sideways, which also, you know, might work for your trades. You certainly won't lose any money from that either, even if spreads do stay sideways.
Yeah. So,
yeah.
Well, let's sum up. What have we established? We think it could still go on, but it's getting less and less likely. NVIDIA looks by all standards expensive, especially when we take this beautiful curve into consideration we had here.
We remember, so just on that, NVIDIA itself is dependent on people buying into the curve, continuing to go up. So yeah, I mean, if people, you know, if the CapEx stops or slows down, then the earnings growth expectation will obviously falter. The other risk to NVIDIA obviously is competitors who have competitor chips and so on and so forth. You know, I'm not a tech guy, so I wouldn't know. I'd say the risk is sort of bigger on the companies who are investing this stuff, because the benefits will come out a lot further down the curve than what's being priced in at the moment.
Yeah. No, fine. Hey, let's call that a wrap. I'll cut.
Cool.
I added the pictures on nicely later on top as we spoke about it, and then let's just hope our viewers. Now I'm breaking the third wall. That our viewers enjoyed our green room conversation. It's always lovely when we get carried away, Nick. And only a quarter or 3/4 through the conversation, you think, no, actually, I could wrap that. We don't have to record it. We save some time and give our thoughts to our audiences. So if you enjoyed that, like us, share us, and yeah, even if I'm smoking or not, we're not going viral, apparently. Yeah, we have our standard viewers, but hey,
Absolutely.
You are our standard viewers. We appreciate that you join us, listen to us. And I said the other day, again, if people would have followed our recommendations from China to India to the United States to the high-tech sector, I think we had a couple of really, really good calls in here for the last.
Outstanding
and
calls.
I've checked it. We are now on, that is the 51st, I think, gray market.
Really?
Call it. Yep. We're almost at 52. We're already in over a year. So everybody who was in from the beginning, and I know a couple of our students did a lot of the stuff we were talking about and had quite successful trades with it. Yeah. Stuff the algo. Share us, even if we're not being promoted by the algo. That's all I'm saying. Nick, any final last words to that?
No, that was that's a wrap, as they say.
Lovely. Then I press now the stop button. See you hopefully next week, our beautiful audience. Bye-bye.
Looking forward. Bye-bye.